Hi, welcome back. I am Marisol.
I'm Mina.
And we are Impower Real Estate. So today's video, we will be giving you some seller tips. So we're gonna talk a little bit about how to choose a solid, strong buyer when selling your home. So number one, remember, highest offer isn't always the best one.
No. So of course, if you get an all cash offer for $10 million, take it. Provided that the cash is there, obviously. The reason why highest may not always be the best is because if your buyer needs to take out a loan, your home has a market set value. And that value is not so much, how much love you put into it, it's how much love your neighbors put into it. So if your neighborhood isn't selling $10 million, it's okay. You want to pick a buyer that has a loan that will be able to afford the current market value and or be able to pay the difference. For example, if your home is worth about $500,000, $500,000 in today's market, you have a buyer that offered you $550,000. Now, the bank is gonna make sure that they look after their own interests, so they're going to do what's called an appraisal. An appraisal will determine the value of your home and how much the bank is willing to lend. So once the appraisal comes back at $500,000, because that's what the home is worth, you need to make sure that particular buyer who offered $550,000 is willing to pay the additional $50,000. So if their cash is not parked in the bank on top of their down payment, then just because they're highest and they're willing to pay more for your home doesn't mean that's the best buyer.
Look out for the DU and pre-approval, okay? So what's the difference, Mina, between the DU and the pre-approval?
Thank you for asking that, because a lot of sellers don't know. As a buyer's agent, you should submit it as a complete profile as possible, and one of the big things is how strong is your loan. So with the DU, it means desktop underwriting. What that means is an actual loan officer in a bank have received the buyer's tax documentations, bank account statements, and also their pay stubs and proof of funds, the down payment. That DU then can determine how solid your buyer is. So that's very, very important. When we talk about pre-approval or pre-qualifications, it's just a less level of detail, so to speak. So with the DU, you're required to submit your pay stub, your tax return, your bank statement, and then allow the loan officer to run your credit. Now for pre-approval or pre-qualification letters, they may or may not run the buyer's credit. They may or may not have seen the buyer's down payment. They may or may not have verified, that the buyer is working, and may or may not have seen their tax return.
So anyone can get a pre-approval.
Pretty much.
So when you see them turn on DU, then you're like, okay, they've jumped through all the hoops. That is a stronger one than somebody who's just giving you a pre-approval.
So don't fret. If you get a pre-approval or pre-qualified letter, you can then ask your agent to follow up with the buyer's agent to continue get that DU for you, so you can feel more comfortable and this buyer could be more solid in this transaction.
Proof of funds, okay? So that is very important when it comes to selecting a buyer. You're able to see how much foundation or how strong their foundation is when it comes to purchasing your home.
And the additional reason why proof of fund is so important, not only because it is the down payment that allows the bank to lend the money. There's a lot of creative ways to buy houses pre-2008, right? But post-2008, the mortgage industry has very strict rules, so that proof of funds must come from a direct relative if somebody is going to give them the down payment, or it has to be in the buyer's bank for at least, some banks say 30 days, but most say 60. So you want to make sure the funds are there and that they're solid before you say yes to this particular buyer.
Watch out for possible buyer restrictions. What does that mean?
So what that means is if the buyer is taking out a loan, they may have different types of loans. So the major ones are FHA, conventional, NVA, and of course there's the other ones. Now, depending on what your home is, you could be selling a townhome or a condo, that the complex itself has restrictions. So your complex may not take an FHA loan or a VA loan, and it has nothing to do with you, so please don't feel bad. But what that means is if the buyer is coming to buy with that particular loan, then that buyer isn't eligible for your home. Another case may be that you are in, I don't know, Laguna Hills, right? And you're looking to sell your home for 10 million. And the buyer has an FHA loan, you know, or a conventional loan. Now, those loans also have loan limits, right? So how much the bank is willing to lend. And I can honestly tell you it's not 10 million.
It's not.
So there's
a little short.
Yes. So that would become another restriction, that this particular buyer loves your home, wants to pay 11 million, but it's not going to work. So those are the examples of restrictions that may not work for you as a seller. So look out for that.
Who can close escrow the fastest?
Yes. So escrow, as everybody knows, is a third party kind of a neutral zone where escrow makes sure everybody does what they're supposed to do per contract, right? So as a seller, you're supposed to allow the buyers to do all kinds of home investigation, just make sure they're 100% sure about the house before they hand you the check, and time for the bank to do their stuff. So why is when escrow is closing important? Because that determines when you get your money, right? Now, the faster you get your money, the better.
Heck yeah.
So if you have a buyer that can close in 10 days, 15 days, 25, right?
Yeah.
Versus a buyer that may need a little bit more time, not because the buyer is not willing to take your home, it's simply that the bank perhaps is gonna need a little bit more time to complete processing of that said loan. You just wanna compare it in regards to what your plans are. So it may be worth your while to do like a 45-day escrow, 60 if you're looking for a replacement home. However, in the best possible situation, I personally like my money faster. So how about you, Marisol?
Yes, please. Tomorrow if you can. Are there any upfront requests from any of the buyers?
Upfront request could be that they need longer escrow. It could be that they need your refrigerator, your couch, your dining table, and then some, right? So right now we're in a seller's market, you're not gonna see that as much, but if it's a buyer's market, meaning that, you know, buyers are kings and queens, they may be asking you for your furniture.
Yeah, so it's always good to know, like, hey, what kind of requests are they throwing my way?
Right, but if they're paying 10 million, give it to them. Like, get a new one. Now, if it's gonna put you into any kind of hardship to part with your appliances, you know, washer and dryer and refrigerator are usually the popular ones too that buyers request. Take a moment and weigh in. You know, are you ready to upgrade, or do you need it and you don't want to put yourself into a financial situation, right? So I like new, but if I can't afford it, I'll take my with me.
Any other incentive terms? What does that mean?
So buyer might try and sweeten the deal and get your swing vote by offering a couple of different things. For example, they may waive termite repairs. They may say that they'll take the home as is without asking for additional repairs.
Right.
They may shorten their contingency terms. We'll explain more on the next one. The idea is if it could possibly save you money, save you time. Those are the incentive items that would definitely swing my vote to like, oh, this one's better.
Contingency time periods. What can you go a little bit more to that? What does that mean?
Yes, when you hear your agents talk about contingency, or when you see it on the contract, you see about the contingency. What it means is normal transaction will give you time to check out the house, check out the school district, check out the crime report, do a thorough home inspection to see if the outlets are working, if there's any leaking pipes, that kind of stuff. So those are all things that we call contingencies. And the stuff that is not related to the house, are loans, obviously, so time for the loan company to do their appraisal, to do their evaluation, and insurance, to come through and make sure that they'll insure your home after you buy it. So all those things take time. And now we don't expect the seller to wait forever. So there is specific time periods per contract in each of the states. So in California, you have 17 days for the inspection and appraisal, and then you have 21 days for the loan to be all wrapped up and approved, right? So within those time period, a strong buyer will say, hey, we can get it done in 7 days or 10 days or 14 days. So those would be the reasons why this particular buyer is stronger than the next one, because if a buyer can confirm their interest and their commitment to your home within 10 days on the inspection contingency, then I would say yes.
First-time buyers and their programs.
So a lot of buyers are only able to buy if they can qualify for first-time home buyer programs. Now, some people view that as a bad thing. Me personally, I think it's fantastic, because what happens if a buyer can qualify for down payment assistance, they can qualify for the first-time home buyer program. See, the money is coming from the government, so the money is coming from a solid place. The down payment and the ability to close the loan, it's that much more solid. So if your home is in a place where it qualifies for first-time home buyer programs, because that matters too. If you're selling that $10 million in Laguna Hills, you don't qualify for first-time home buyer programs, so just say no. However, if you're over here with us in Fontana, Rialto, Rancho Cucamonga, your buyer may potentially qualify for the first-time home buyer. So don't say no just because you think they have to get the money from elsewhere, because it's no different than them getting it from grandpa or from mom and dad. First-time home buyer programs, for me, if they can prove that they qualify, and the qualification will be issued from the agency, it's solid money. So for me, that's a win.
Okay, so that is about it for today, right? On the seller tips. So I hope that you found this helpful.
Come back for more.
Yes, come back. Remember, we will be releasing videos every single Wednesday, right? So remember to go ahead and like and subscribe to our channel. Go ahead and share, like and subscribe, and we will see you back here very, very soon.
Yes. Thank you. We're Impower Real Estate.